Hi everyone, welcome back. Today let's look at an example using our 1031 exchange calculator worksheet. So this calculator is going to be available for you to download, so do check it out and use it to your full advantage, right? So let's just go over some basic information here. So this is an example. I already filled out some information to save you time so you don't see me stumble through everything. In the worksheet, this is going to be a blank one, so you obviously can use that, but this one I have an example here already. So basically you see all these green text, that's where we would change or add in our information. In the first part, we're going to fill out some basic information, right? So for the tax filing classification, you get to choose you filing as single taxpayer or married filing jointly. So if you are married filing separately, so you can just use single. So this is not supposed to replace your tax preparation, your tax filing. This is just a quick calculator. This is useful when you are comparing different scenarios. You think, oh, do I want to do 1031 exchange or do I want to just sell it, right? Because the first question, should you do a 1031 exchange or not, is you have to calculate your capital gains. So this calculator can help you quickly calculate some number. In our example, we're going to choose our case as single taxpayer and then your state of residence. So this can be different from the state of the property. So I'm going to choose California as state of residence. So there are all other states that you can choose from. So when you choose your state, it's gonna show you the state capital gain tax down here. And I'm estimating the, say, the income that I make from other jobs, so excluding this transaction. If I include this transaction, I think, okay, from W-2 or plus some other source of income, gonna make like 160K. Okay, this is on top, right? This is excluding the transaction, not counting that transaction. So you put that in there. And of course, you can change the numbers. Just saying that you're estimated to be 200K, you could do that as well. See our number change? Okay, and then this part is about the property that you want to sell. You want to choose the state of the property that you want to sell. So in this case, it happened to be California. But in your case, it could be taxes for that, you live in your state, and if you invest out of state, you want to choose that state the property is. And then the next thing you want to enter is the initial equity that you invest in this property. So usually that's the price that you pay for it, right? And then you put in the mortgage debt, and then you put in the closing cost to sell the property. In this case, I'm just not going to put it to simplify the example. And then you put in the depreciation that you took on this property all this year that you own it. So once you enter all that information, it gives you your adjusted basis for your relinquished property. And then you put in the sale price of the relinquished property. So maybe, let's just say we put in a sale price of 1.2 million. So with 1.2 million, and then we're gonna pay off our outstanding mortgage of 500K. And then we have a closing cost for selling this property at 75K. So remember up here, you have the closing cost for when you bought it, and down here you have the closing cost when you sell it. So you can add it, but don't want to add it at this point. So the calculator gives you some information on the minimum market value of the replacement property if you want to defer 100% of the capital gain tax. So you need to buy this much of property to make sure that you don't have to pay boost. And then also it gives you the minimum mortgage that you need to meet. So for the new property, you need to buy at least $1.125 million, and you need to have a new mortgage on that new property, at least 500K. Otherwise, you're gonna risk have to pay some boots. And then for the next step, we talk about the new property. You say the purchase price for the new property is $1.25 million. And then this is the green part where you enter, right? Everything else in black is what the calculator gonna fill in for you. It's calculate your adjusted basis for your replacement property is $775K. And the cash spent on acquisition is this much. Is basically the price that you pay for your property. Here is calculate for you, say, if you don't do a 1031 exchange. So remember you have 150K in depreciation that now you're gonna have to pay the recapture, right? The recapture just says capped out at 25%. So this is your tax due on that depreciation recapture, because based on the calculation you have a recognized gain of 475K. So out of that 475K, the 150K is taxed at the 25% for depreciation recapture, and the rest is being taxed at your federal capital gain tax rate. And it's kind of vary because of your income and your filing status. So it's estimated your capital gain tax rate is 15%, right? And then because once you hit over to 200K for single taxpayer, net investment income tax kicks in. So if you have other filing status, you can check out what is the threshold that when you hit that net investment income tax gonna kick in. And that net investment income tax is the 3.8%. And because you live in California, you have the state capital gain tax over here. So because of that, so you have a gain of $475,000, you're gonna have to pay tax approximately about $167K. So that is quite a big chunk, right? And the net amount that you have for reinvestment is only $457K. However, if you do a 1031 exchange, all that tax is being deferred, so you have way more. You have $625K to reinvest. So that's great. But of course, remember your purchase price have to be minimum this much before you could avoid paying both. So the calculation went through and it calculate your realized gain or loss, and then it's your recognized gain because you defer everything, right? Because of the purchase price is higher than this minimum price, you get to defer everything, so there's no recognized gain. You are able to defer the entire gain, the 475K. The calculator gives you a little bit more, but at least for our situation, it's not applicable. So you can see that with the 1031 exchange and this number, which is quite reasonable for California, right? Everything in California is so expensive that you're gonna save $167,000 that you get to defer, and the capital gain taxes and the depreciation recapture and the investment income tax, and then the state income tax rate. When we think about selling a home, a lot of time we only think about the capital gains tax, but that's not true, because as you can see, there's many other layers of taxes that hit you on top of the capital gain tax. So I hope the calculator is useful, so do take advantage of that, download it, and run your scenario. And if you want a more tailored calculation, so we have a course that actually use TurboTax to enter a 1031 exchange. So if you use TurboTax in the past, or at least if you have your prior year tax return, you can enter that into TurboTax. And TurboTax doesn't cost that much. It's usually like about 100 something for the federal if you just stay a little bit more. So if you want to run it yourself, you could. So you can use that course to follow step by step, and then you put in your number. So you can use that to report the exchange. So it's gonna help you report the 8824 tax form for your 1031 exchange. And of course, it's gonna show you all the calculation. Once you pay for the software, it's gonna show you all the tax form, right? You can either do it while you are consider a 1031 exchange before you actually conduct the 1031 exchange. You actually can use TurboTax to do tax planning that way. Like right after you do your 1031 exchange, you can also use TurboTax to see, oh, do I have any booth? Do I have any large amount of tax due? Then you can make an estimated payment, right? It's important because a lot of time we do all this transaction, we don't think about it. We wait until the next year and we don't make enough estimated payments for that transaction, and then you're gonna be hit with penalty and interest. So don't be like that investor, right? You wanna be way more prepared. So it's great. You can use TurboTax for that without cost. It'll be step by step to show you how to enter your 1031 exchange or estimate your 1031 exchange, how it's gonna affect your tax situation. And then if you don't want to do TurboTax, or you don't want to do it yourself, you can contact us. And we have a team that dedicated to real estate investor that can help you to sit down with you and consult with you and crunch the number for you and help you with the tax plan and how to proceed. So you really have many different options, but the important thing is always learn, always know what you're doing yourself. Anything you don't understand, especially with your investment, you want to make sure that you have all your questions answered, because it's your money. Nobody can safeguard everything for you as good as you do. So do safeguard your money, and you need to be in the driver's seat to guide all these conversations, even with any type of experts. Right? Good luck with everything, and then if you have any question, do put it in the comment section. Let us know. Take care, and I'll see you in the next video.